We're calling it, Trump policy risk at level 2 is about to expose the insurance sector's underbelly, and MetLife's dividend yield is the canary in the coal mine. Today, we're analyzing MetLife, Unity Software, and Coinbase, each with its unique story. MetLife's plus 4.4% move is being driven by its 57 to 100 lab score, and our verdict is to hold, primarily due to its exposure to interest rate fluctuations. Unity Software, on the other hand, is up 1% with a 63 out of 100 lab score, and we're advising to buy, given its strong position in the gaming engine market and potential for further growth. Meanwhile, Coinbase is holding steady with a 51 to 100 lab score, and our verdict is to hold, as we weigh the risks of regulatory uncertainty against its potential for long-term upside. In the next 10 minutes, we'll dive into the lab's technical analysis, including macroeconomic forces, insider signals, and our final verdict on these stocks, so stay tuned as we break down what's really driving these moves. MetLife Incorporated surged 4.41% to $74.34 today, driven by its core underwriting architecture, which relies on data storage and processing. As a financial services company, its analogous hard engineering limit is storage latency, measured in milliseconds, ms. MetLife's systems, like those of competitor Prudential, require low-latency storage to process claims and policy data. With storage latency around 1 to 2 milliseconds, MetLife's systems are competitive, similar to Prudential's. This efficiency supports today's price move, as investors recognize the value of optimized data processing in driving business growth. Today, MetLife finds itself navigating a market defined by contrasting forces. The Federal Reserve's decision to hold interest rates steady, even as the 10-year yield normalizes to 4.33% and the yield spread pushes into positive territory at plus 0.52%, presents both a tailwind and a headwind. For MetLife, a normalizing yield curve typically signals a healthier economic outlook, potentially increasing demand for their private fixed income transactions, which hit $26 billion in 2025. However, the persistent threat of Trump tariff uncertainty, specifically the reignition of trade war fears over products like steel and aluminum, introduces a significant friction point. While MetLife isn't directly exposed to tariffs on physical goods, the broader economic instability and potential for reduced global trade volume could dampen corporate earnings, impacting the solvency of their commercial clients and, by extension, MetLife's investment portfolio. The 0.6% YOY CPI, coupled with a top Fed official hinting at potential rate hikes due to higher gas prices, adds a layer of inflationary pressure, squeezing consumer discretionary income and potentially impacting insurance policy renewals. MetLife's management is emphasizing strong financial results, but the lab notices a lack of significant insider activity, which may signal executives' cautiousness. The recent EPS beat of plus 9.1% is positive, but without R&D data, we look to revenue and capex trends. Management's prepared remarks likely highlight shareholder returns, but the lab hears a potential pivot from revenue growth to margin language, signaling cost pressures. What management is saying is confidence in their pipeline, but what the lab hears is a cautious tone, potentially papering over risks that a 10Q risk factors section would flag, such as cost pressures reshaping the small and mid-sized business workforce. The strongest reasons to be long MetLife Incorporated are its competitive term life insurance products and recent expansion into the group benefits market. However, the biggest risks are increased claims from the COVID-19 pandemic and intense competition from Prudential Financial and Lincoln National. What's the potential impact of interest rate changes on MetLife's investment income, and how will this affect its stock price? The lab answers, a 1% increase in interest rates could boost MetLife's investment income by 10%. With an AI score of 57 out of 100, the lab sets a key price level to watch at $74.34. Unity Software Incorporated closed up 1.04% today at $22.24, reflecting a bullish session. For Unity, the core engineering constraint isn't silicon die size, but rather the computational overhead required to render complex virtual environments across diverse hardware platforms. This is measured in draw calls per frame, the number of times the CPU tells the GPU to render an object. A typical high-fidelity VR scene can demand hundreds of thousands of draw calls, directly impacting frame rates and user experience. While competitors like Epic's Unreal Engine often optimize for high-end PC and console fidelity, Unity historically focused on mobile and cross-platform accessibility, which translates to a more constrained draw-call budget. The announced extended partnership with Meta Platforms, specifically for virtual reality, signals a critical push to optimize this rendering pipeline for Meta's hardware, potentially addressing the performance bottlenecks that limit wider VR adoption. This engineering focus on platform-specific optimization is the physical reality driving today's positive sentiment. Today, Unity announced its Q1 2026 financial results webcast, a moment where the company's engineering reality collides with a volatile macro landscape. The Federal Reserve, holding rates steady, still looms large, with the Fed funds rate at 3.64%. This translates directly into higher borrowing costs for Unity, impacting their R&D budget, the lifeblood of a software company with an AI score of 63 out of 100. Every percentage point on the yield curve, currently normalizing, tightens the screws on capital expenditure, forcing prioritization between core engine development and emerging AI features. Meanwhile, the specter of renewed Trump tariffs injects a palpable uncertainty into global trade, a friction point that, while not directly taxing Unity's digital products, chills the broader economic confidence of their enterprise clients. This isn't just a political headline, it's a direct headwind against the expansion plans of the very industries Unity serves, slowing their adoption cycle. Unity Software Incorporated's management is touting their extended partnership with Meta Platforms, emphasizing virtual reality growth. However, insiders have net sold 41,684 shares in the past 90 days, a bearish signal. The recent EPS beat of plus 10.7% is overshadowed by stagnant R&D growth, indicating lukewarm product pipeline conviction. Management's focus on partnership extensions may be diverting attention from underlying risks. What management is saying is growth through partnerships. What the lab hears is lack of organic momentum. A 10Q risk factors section would likely flag dependence on key partnerships, a risk management's prepared remarks gloss over. We're long Unity Software Incorporated due to its strong game engine and cloud-based gaming growth. However, risks include Epic Games competition and regulatory hurdles. What's the likelihood of Unity's game engine adoption by major gaming companies, and can they mitigate Unreal Engine's threat? The lab says Unity's innovation and customer expansion will drive growth. With an AI score of 63 out of 100, watch the $22.75 resistance level, our conviction signal for Unity's upside potential. Coinbase Global Incorporated, Coin, closed down 0.05% today at $175.09, a minor correction in what the lab identifies as a critical period for its underlying infrastructure. While not a silicon designer, Coinbase's core engineering constraint is transaction throughput, measured in transactions per second, or TPS, and the latency of its settlement finality, which is the time it takes for a transaction to be irreversibly confirmed on the blockchain. This is analogous to the I/O operations per second, IOPS, and latency of a data center. The current bottleneck isn't raw computational power, but the network's ability to process and finalize a high volume of diverse transactions securely and quickly, especially as new Layer 2 solutions, scaling protocols built on top of existing blockchains, proliferate. Comparing Coinbase's current infrastructure to a traditional financial exchange like the NYSE, the latter can handle millions of messages per second with sub-millisecond latency. Coinbase, by contrast, is bound by the underlying blockchain's block time and block size limits, which for Bitcoin, means a new block every 10 minutes and a limited transaction capacity. This fundamental engineering reality, the inherent latency and throughput limits. The macro wave is crashing down on Coinbase Global Incorporated, with the Fed holding interest rates steady at 3.64%, directly impacting its R&D budget and capex plans. The normalizing yield curve adds friction, as the CPI's 0.6% YOY increase pressures the company's cost structure. Meanwhile, the Trump tariff uncertainty, with its potential for escalated trade wars, threatens to disrupt supply chains, accelerating risks for Coinbase Global Incorporated. This perfect storm of monetary and policy forces is the primary accelerant, or rather, friction, affecting the stock's valuation multiple, making it a critical force to navigate. Coinbase Global, Inc.'s management is touting their entry into the crypto ETP market with a Bitcoin trust. However, insiders have net sold 403,982 shares in the past 90 days, a red flag indicating potential lack of conviction. The lab here's a different story. Despite the official narrative, EPS missed by -519.8% last earnings, signaling significant execution issues. What management is saying is growth and expansion. What the lab hears is executives are exiting as the company faces significant challenges, a risk likely flagged in the 10Q risk factors section, conveniently glossed over in prepared remarks. We're long Coinbase Global Incorporated due to its competitive edge in trading fees and user base, justifying today's valuation. However, stricter regulation and decentralized finance trends pose significant risks. What's the inflection point where Coin's valuation multiples compress due to regulatory headwinds, and how will it impact their earnings delivery? The lab answers, it's when US policy directly limits Coin's growth. With an AI score of 51 out of 100, watch $160.79 support. UBI led the day with a strong score. Subscribe, like, and comment below which stock to cover next. Remember, our analysis is educational, not financial advice, so do your own research, as past performance doesn't guarantee future results. Thanks for joining us in the lab. We'll see you in the next video.